Hello, it's Rhonda Thomas, and we are ready to do Managerial's Chapter 2 coursework. Okay, so remember Chapter 2 is job order costing. So let me share my screen. Get things set up here. We'll probably try to go as quick as we can. All right, so the first problem here is an algorithm problem, which you'll have different numbers than I will. And so we're getting a series of numbers, and these numbers have relationships with each other. Now, I think the best way to do this is to use the T accounts that we talk about quite a bit in class. The three inventory accounts: materials, work in process, finished goods. There it is. Okay, and then we should have cost of goods sold down here, COGS, manufacturing overhead, and anything else we need. Okay, so I'm going to take out everything I have, and we're going to put in the numbers so we can find what we're looking for. Okay, so remember, the inventory accounts all have beginning and ending balances that we'll look for. Okay, so here's what we're trying to find. So we're trying to find cost of goods sold. We're trying to find direct materials and then direct labor. And that's the order that we'll find them in. Okay, so we already know what sales are. So sales are 1,326,600. Now I'm going to put in gross profit. Okay, 358,200. So how would you find cost of goods sold if you had sales and gross profit? You would take the sales and subtract the gross profit, and that would give you your cost of goods sold. Okay, cost of goods sold. That's the first thing that you find. Okay, so yeah, cost of goods sold. So cost of goods sold is going to come in as a debit here for this amount, right, of 968,400. Give it a try. So you're going to have different numbers than I do, so be careful. Then we have indirect labor, indirect materials, other overhead. Okay, we have purchases, we have total manufacturing costs for the period, and materials inventory end of period. Okay, so let's go ahead and put purchases here. Okay, purchases is coming in 676,600. Okay, we got that, so that's gone. Total manufacturing costs for the period, here they are. We're going to add these three down. Let's just feed in what they say. So 1,464,600. This is the, it doesn't even say what month we're in, but for whatever period of time we're in, these all add up to 1,464,600. Then ending inventory is right here. So they have to give you enough information for you to work backwards. So I got 59,700. I got those. Now we have overhead. Okay, so now I'm going to put in the overhead. So indirect labor is 119,400. And indirect materials, which is what IM is, 39,800. Other overhead. So here is our total overhead actuals. Okay, and then applied. Okay, so okay, here comes. Okay, so I believe we're going to make this go down. So by the amount that's there, and then it's going to come in here. Okay, so we know what overhead is. Okay, now let's see what's going on with materials. So if materials, and this is the first year of operation, so materials has zero balance. So the available we have to send to WIP is 676,600 if we know this is the amount that remains, then the total amount of materials coming out, and I'm putting that above because total materials is going to include direct materials and indirect materials. So let's do the math to show how much materials went out of here. So we have our available amount, and we subtract the ending balance of that inventory. I got 616,900. Well, how much of this is indirect materials, right? Indirect materials. So you find direct materials by taking the total materials. Okay, so this is total materials coming out of this materials inventory account. And the direct is going in to work in process, and the indirect is going down here. So it says 39,800. So here's what we're going to do. We're going to take the total. We found this, right? We found this. And now we're going to subtract the indirect materials. So I got 577,100. Okay, I'm going to put that in. Okay, 577,100. And then the last one that we find is the direct labor costs. So if these three items is supposed to add up to that, then if we take that number and subtract these two, we should get direct labor. So we want the total costs for the period. Okay, and we're going to subtract, oops. Okay, going to subtract direct materials and subtract overhead. Okay, so there we have 705,700. Before I ask to look at my answer, just for fun, I am going to add up these three numbers. So if you highlight these, right? If you highlight these, does that equal 1,464,600? And you look down here and why, yes, it does. So that is correct. So I think we're in pretty good business there, but it is very helpful to know where these things are going in and out of these T accounts, because to make all this movement happen, you do have to do journal entries. Okay. It is not just for calculation's sake. Those journal entries have to be made. Okay. Next one. All right. So we're going to get a series of jobs with their numbers. Okay. So let's see what we have here. Number 2. This is going to deal with direct labor. So we manufacture RVs. We use job order costing. Labor costs for the time records for June are summarized as follows. So job 101. So now I've got to key in a new amount. Okay, I've got $5,020, $6,070, $4,320, $6,673, and $18,270. And if I add down for all of those jobs, right? All of those jobs with the direct labor, I got $40,353. Now be careful. The supervision is not going to be direct labor. In fact, I got to change that. It's $28.75. So those two numbers are going to matter. Okay. So it says manufacturing overhead is applied to jobs on the basis of a predetermined overhead rate. So we have already figured it out. Predetermined overhead rate. Okay. Okay. And by the way, the direct, okay, so the rate is 23. 23 is the predetermined overhead rate, and the rate of the direct labor is $51. Okay. $51. So what we have to do is we have to divide our labor costs by our direct labor rate to find the direct labor hours. So we had to take, here's your answer. Here's your answer. So this is the labor cost divided by $51 is 98 direct labor hours, okay? Job number 2 had $6,070 divided by $51 labor rate. That one's got 119. So this is telling you how many hours each of these jobs had. And then we're going to take the number of hours times this $23, right? 23 is how much they told us we are applying, right? So when we apply, here's the overhead we're applying at $23 an hour times these hours, okay? So I just went ahead and added those up just to know what it is. So here comes WIP, okay? So we are going to put this in as direct labor, okay? So this is direct labor right here. And then this is going to be manufacturing overhead. So be careful. Okay, manufacturing overhead. So direct labor equals what we have here. And then manufacturing overhead is this. Okay. Okay, so this equals this manufacturing overhead. It's coming, it's listed as salary, right? But it is $28.75. Okay, $28.75, just in case we need to know that. Okay, and then the applied amount is all of this added up. Okay, and then this gets applied. So the wages payable, I think I'm confused again. Let's go back to the direct labor. Direct labor has to debit work in process for $40,353. Manufacturing overhead is going to go into WIP for $28.75. Okay, let me take this out. Okay, all right, this is the applied. Yep. So applied is $18,198. Okay, but the actual we would put to, okay, and then wages payable would be both of these. So wages payable, so we're going to make some journal entries here. Okay, it says journalize the June 30th entry to record the factory labor costs. So now let's put June 30th. Okay, so here's your direct labor. It's going to come out of wages payable and go in here. Okay, and then all right, so let's do work in process for the direct labor, 40,353, and then it's coming out of wages. Wages payable. Okay, 40,353. Okay. And then, so that should be good. I think it is. Let me just double check it, because that's moving direct labor. Yep, here are your direct labor costs. This is salary, right? This is salary. So the salary goes in here. Okay, and it's going to, okay, so we want June 30th again. Okay, it let me there. Okay, so then it says manufacturing overhead is applied to jobs on the basis of predetermined overhead rate of $23 an hour. Okay, let me go back and look at what we got here. Okay. So then we want work in process for the amount applied. And we applied 18,198, and that's going to go in there. Okay. Okay, hang on a minute. Okay, I was having a little rounding issues here with Excel. So sometimes, here's what we got. So once again, this company is got direct labor for all these jobs, 1, 2, 3, 4, 5 jobs, plus a salary amount, which we know is going to go into manufacturing overhead. So the first entry was to record the direct labor and the salary of $28.75. We're going to put that in manufacturing overhead, and they're both going to come out of wages payable. So this one and this one offset this credit, okay, of wages payable. All right. So then what we did was we then needed to come up with applying the overhead. Well, we took the total overhead and divided each of these by 51 hours, $51 an hour, to come up with an amount of hours. Okay, my hours add up to $791. Now be careful. Then when I took this number times 23, there was a rounding problem. So it would not let me take this. So then what I ended up doing was taking the 791 hours, just the number 791 times 23, and you'll see that it's a little bit less than that, less than $5 difference. But I'm going to show this here. Okay, so let me think about this a minute. So I'm going to take this out. Okay, and then I'm going to put this here. Let me insert this down. Yep. Okay, that's all right. So here's what we have. Here's the 791 times $23 an hour. Yep, because that's how much we are applying overhead. The $23 an hour rate. Okay, and so, okay, that's fine. Oh, it's okay. Well, I just want this to go in here so you can know the $23 an hour rate. Now I want this to display just what I'm saying so that you know where that's being calculated. Okay, so so 791 hours of direct labor times $23 rate. Okay, let me do this one again. So $23 times 791 is 18,193. So then 18,193 is going to be credited to manufacturing overhead and debited to work in process. So those two go together. So that one, we had a little bit of troubles with the rounding, and sometimes Excel does that. when you're trying to figure things out. All right, let's go to number 3 now. Okay, this is a predetermined overhead rate. Okay, so what we want to do is we want to we got to separate these things out. Okay, so we do not want direct materials. So we do not want engine parts. We do not want direct labor. Okay, so what we want, we've got to come up with our overhead rate. Okay, so let's figure out what manufacturing overhead is. So manufacturing overhead, let's go ahead and key in what we know. So 77,000 is the repairs and equipment depreciation. 214,200 is the shop supervisor salaries. Okay, the shop, that's another word, factory, shop, plant. Okay, and then we have shop supplies, 29,900. So let me move these over here. So they're just trying to see if you know what should be considered overhead and what shouldn't. Okay, so let me double check this. So now we have 1, 2, 3, 4, 5. No, we don't want shop direct labor because that's DL, that's DM. So we 1, 2, 3, 4. Okay, so when we add these up together, here is our overhead for the shop. Okay, for the shop. And these are all dollars here. So we want to make sure that gets listed. Okay. Okay, so just a shop and repair. So just to make sure we have it listed, supervisor salary. Okay, then we have property tax. And then we have shop supplies. Okay, so what we want to do is this is our manufacturing overhead because advertising goes in selling expenses and admin go in admin. All right, so now here is our total that we want to spread out over a certain number of direct labor hours. So now let's take direct labor. Okay, direct labor. It is 1,104,000. We're going to divide, and that is dollar value. Okay, that's dollar value. We're going to divide by the number, or divide by the wage per hour. Okay, so our direct labor rate, okay, there's a direct labor rate and there is an overhead rate. So we want that as $23 an hour. Okay, so now we should be able to come up with the number of, so we're going to take direct labor. So we're going to take 1,104,000 divided by $23. Okay, so this is total dollars in labor divided by its rate is now going to give you a total hours. So this is direct labor hours. So we're going to find it now. Okay, so the number of hours, and we're going to divide by the direct labor rate per hour. So we're looking at 48,000 direct labor hours, right? Direct labor hours. Okay, and now we're just wanting to get a rate. So now we know how many direct labor hours. We're going to divide this total manufacturing overhead by those number of hours to see what rate we get. So this is the predetermined overhead rate. Okay, so here we go. So we're going to take the total and we're going to divide by 48,000 hours. So it looks like, let me format it here. It's $7.50 per direct labor hour. So be careful. You might see if that makes sense. Okay, once again, we're spreading this out. We're going to allocate it. Okay, allocate or apply $7.50 for every direct labor hour. Okay, so there is your shop overhead rate, $7.50 per direct labor hour. So every hour that we work, we're going to apply that much overhead. And let's go ahead. $750 of manufacturer overhead per direct labor hour. So if you can explain that, that will help. Okay, we're ready for number 4 now. Okay, let's see what we've got. All right, so this is job order costing, and we're going to do some journal entries here. Okay, gonna do some journal entries. So, okay. So I am going to get T accounts. So bear with me just a second. Okay, so we're getting ready to do some journal entries. I like to use T accounts to know what I'm going to debit and what I'm going to credit. So let's start off with the materials. Okay, so I'm going to put materials up here. And I'm going to put debit as my normal balance. Remember, this is an asset. So you make this account go up. All right, so I'm going to skip. I'm going to put B for beginning and E for ending. Okay, for all of these, this is going to be WIP. B for beginning, and then of course these have debit balances too. This is finished goods. The debit normal balance. We're going to check for beginning balances. Okay, and then these could have ending balances, or they will have ending balances if necessary, but I think we're only doing journal entries. So you're going to actually watch the numbers we've been talking about be accounted for with journal entries now. Okay, so when we say we bought a certain amount on account, okay, what are we going to use? We're going to make materials go up, right? I'm going to put P for purchase. Okay, I'll try to do this as quickly as I can. So 586,340, and then we want accounts payable. So I'm just going to drop down here and get me an accounts payable. All right, so AP, and it has a credit normal balance, and that is going to offset 586,340, and all of our numbers on here are going to be dollars. Okay, so it's okay to make them dollars. So that's what we want. Yes, we can get rid of the cents. Okay, so let's go ahead and debit materials, and be sure to watch the number 586,340, and crediting accounts payable 586,340. Okay, the next one is requisitioned. Okay, requisitioned. So materials. So a certain amount of materials is going to come out of here. And I'm going to make that total. So they said that the total 492,530 is the total. So a certain amount of this is direct materials, and we'll do manufacturing overhead here. Remember, actuals and applied. Okay, so we're going to have indirect materials come in here, and the indirect materials is $64,030. Okay, so then we need an amount that will go in here in direct materials. So then you take the total materials minus the indirect materials, and you get these. Okay, so then we want work in process for the direct materials. We found that 428,500. Then it's going to go in manufacturing overhead for the general, it says general factory use. Okay, that's what the wording is. And then all of this is coming out of the materials account. Okay, so 492,530. Okay, now we're going to do factory labor. Okay, factory labor is going to be wages payable. Okay, so its total is 603,930. So out of here goes 603,930. 603,930. Okay, 603,930. Is that correct? Yes. So out of this, so part of this is direct labor, and the other part is indirect labor. Okay, so, and if we have to make these go down just a little bit, that's okay. So now we have, well, we can plug for this. So this is going to go in work in process. This is going to be credited to wages payable for the full amount, 603,930. They said the indirect is manufacturing overhead, and it is 114,750. So 114,750. Okay, we're going to subtract this from this. So this is how we find our direct labor. Okay, direct labor is the total amount of wages minus the indirect labor. So we're looking at, okay, so we're looking at work in process of 489,180 for direct materials. And we're going to check our work and see if we're okay. Okay. All right. So now we've got direct materials, direct labor. We don't know anything about a beginning balance. Other costs incurred on account for manufacturing overhead. So manufacturing overhead is going to go in here. So this is going to be other. So we'll put other. Okay, so here it goes in manufacturing overhead. Okay, we've got 140,720. Okay, and then we've got selling. I'm going to go ahead and put selling expenses. Okay, selling expense is going to come in for 216,950. Okay, and then we have admin expenses. So admin expenses, and it's going to, and remember, payables have credit normal balances. Expenses have debit normal balances. Okay, so here comes that administration amount. Okay, so let's go ahead and put these three in. Let's put in manufacturing overhead, and they told us what it is, but then we just have to add those three numbers together to see what we're going to credit. So then selling, okay, and then admin. Okay, and then we got to add those together on account. So accounts payable, yep, it's going to get the total amount. accounts payable. So let me add these up. All right, so we've got other manufacturing overhead. Whoops. Equals other manufacturing overhead plus selling expense plus admin. Those three get added together. I got 516,660. Okay, so 516,660. There it is. Okay, now prepaid expenses expired for manufacturing overhead. So here we go again. So prepaid. So that amount is 26,970. Selling gets an amount of 22,870, and admin gets a debit of 16,420. And then prepaid, so prepaid expenses, or yeah, we'll go expenses. Remember, this is an asset because it has that word prepaid on the front of it. Okay, so we're going to add these three together, and down this will go down because this is all debits, right? Debits. So prepaid have expired, which means that they're being used now. And I got 66,260. Okay, so I'm going to put prepaid expenses right here. Down it goes, 66,250, and then fill in the rest. So manufacturer overhead, selling expense, and admin expenses. Yep. So luckily we are really not having to calculate. They're telling us what those amounts are, which is fine. 16,420. So let's see if we're right. These last, hang on. I miskeyed. It should be 260. Yep. Miskeyed it. There it is. All right. Okay. Depreciation of the factory. Okay. So we're going to have factory. We're going to have office equipment and building. So we've got one manufacturing overhead and two amounts. And then we've got accumulated depreciation as the credit. So I'm going to put accumulated depreciation here. And it is a contra asset. Which, contra asset. Okay, so that means it's going to have a credit balance. So we've got three different depreciations here. Okay, so we're going to have depreciation expense. No, going in manufacturing overhead. That's the first one. Okay, depreciation expense. Okay, it's going to go in right here, 26,970. And then selling expense. I'm sorry, administrative expenses, because there's both office. I think we put both of these here. Okay, we got 39,870 and 78,570. Okay, so let's put both of these in depreciation. Oh, I'm sorry. But it is an admin expense. Okay, it is an admin expense. So you'll find that under there. That's fine. Okay, just let that be. This is really going to a depreciation. So this is really going to a depreciation account, but it's still going to count as admin. Okay, so now then accumulated depreciation gets all of it. So we have a debit of 26,790, depreciation expense of 39,870, and 78,570. Okay, and then we need to add all those together to get this. Okay, so here we go, equals this one plus this one plus this one. Okay, I got 128,230. 128,230. All right, now we're doing manufacturing overhead costs applied to jobs. So here it is. So they're telling us to apply 334,210, and that's going to come in here. So 334,210. So we're going to debit work in process for the amount of overhead we are applying, and then it's going to come out of the manufacturing overhead as a credit. Okay, and then the jobs complete. So what happens when jobs are complete? They come out of work in process. So this is the cost of goods manufactured. Cost of goods manufactured. Cost of goods manufactured. And that amount is going to be right here. And they've got 773,970. Well, that means it came into finished goods. Okay, so let's do that. So finished goods gets the dollar products, the products that are finished, and it came out of work in process. So see, it is good to know where this is coming from. Okay, we're almost done. Now we're ready for the cost of goods sold. Cost of goods sold. Okay, finished goods are where things are sold. So they're saying 750,520, and then it's going to come in here 750,520 because this is the cost of the goods sold. So cost of goods sold. Okay, and this has a debit normal balance because it's an expense. It's an expense on the income statement. So cost of goods sold, 750,520, and out of finished goods it comes. Okay, so there you have that. I think we're good. Okay, so I am glad I did T accounts. Okay, I am glad, and I am going to rename this as, okay, just a second. I want to rename, and this is this problem. It is 21B, problem 21B. I want to put that on here. Problem 21B. There we go. Okay, so I'll look for that because I said see T account tab. Okay, CT account tab. All right, so we can get rid of this now. We've done that on another tab where we needed a lot of T accounts. So now let's go to 5. Okay, so I'm gonna, is there some, what it, hold on. Let me see what I did. Oh, I transpositioned these numbers. Yep. So 970. Okay, so now let me go back to my tab here, and I probably did that here then. Manufacturing overhead, 26,970. And then, so that is accumulated depreciation. Okay, so let me fix it. So equals, we have depreciation, and then 2 admin depreciations, and we have 145,230. Sorry about that. 145,230. Okay, 145,230. So never hurts to double check. And oh, I'm just getting all kinds of things incorrect here. My apologies. Wow. Okay. Well, I guess we're not done. That's all right. And So we fixed that. All right, so once again, depreciation should be equal to 26,790, right? Yes, this one here plus, no, this one here. Yep, plus this one plus this one. Ah, and it didn't like it. All right, one more time. Sorry. Okay, depreciation in manufacturing overhead plus depreciation of admin, and then another depreciation of admin. 145,230. Okay, let me try it again. Okay. 570, 870, 26,970. Okay, 26,970 is manufacturing overhead. 39,870 and 78,570. Now why that? Transposition again. Yep. Okay, so 970. Now let's try this again. Sorry about that. This should be 26,970. Okay, now it should be 145,410. See, now if this would have been 145,410, is that right? Yes. Okay. Looks like I didn't get this one done right either. These are good. So this is going to be accounts payable. Okay, so let me go add up. So equals, let me take this out, 140, which is the other, plus 216,950 to, here it is, 216,950 and this one. Whoop. Okay, so I got to fix this one. Just a minute. So my selling expense is in wrong. 216,950. Okay, so then accounts payable one more time is other. Okay, this is prepaid. All right, prepaid, yes. Plus that one plus this one. Okay, so I got 260, 340. Let's see if we're right. Hope so. Wahoo! What else am I missing? Oh boy. Okay. Boy, I just didn't add up very good. Sorry, guys. 950, 16,420, and 26. This other. Okay, so prepaid expenses. Prepaid. Here we are. Prepaid expenses. So we expect 26,970, 22,870, and 16,420. 66,260. That's good. Okay, now we're doing other on account. Okay, so this should be this one. Okay, so let's try this. I think I just looked at the wrong number. Okay, this should be 586, 340. Okay, 586, 340. Boy, I'm still having troubles. I'll be back.